morning. My name is Xhanti Payi. I'm a senior economist at PwC Strategy and joined by my colleague Virat Chadha, who's also part of our team. This morning, we are taking on the second episode for our Actionable Strategies series dealing with inclusive economies. We know that South Africa has discussed inclusive economies for quite a long time, and part of that discussion has included financial inclusion, which has been dealt with in different ways. Virat, I wanted you first to help us just understand what we mean by financial inclusion.
Xhanti, that's a very interesting question and often quite misunderstood. When we talk about financial inclusion, the concept itself, we're talking about the concept that tries and attempts to bring access and affordability to financial products for absolutely everyone, individuals and businesses, regardless of their net worth. I think with this comes quite a lot of other advantages, which is what the concept aims to achieve. Having access to a bank account, for example, allows you to plan your finances better, to save better, to raise capital for your enterprise or funding. But with that also comes personal and financial growth. And the growth aspect of this cannot be undermined or not underestimated, quite simply because that growth is quite essential for our economy as well. As you grow, you consume more, and that consumption leads to other economic advantages, other economic influences, and as society we gain from doing this thing right. One of the things to actually remember in this is that that growth cannot come at the expense of in favor of one subsegment versus another. I think we need to be mindful, given where we come from as South Africa. It is important to take everybody on this journey. The growth has to be inclusive, and that inclusivity in the growth needs to be driven, needs to be invested in, and what we're finding is that in South Africa, as a matter of fact, South Africa is not doing too badly from financial inclusion perspective. So if you look at the formal inclusion stats, we're sitting at 98% level, which is tremendous. As in 98% of our population has at least a bank account.
Yeah.
But 80% of our population has at least a bank account, I suppose, and the rest of us have either we're multi-banked or we are with other financial institutions as well, not necessarily formal banks. And in this concept, I think we need to acknowledge that where we need to head to has to be a little bit more effective in terms of inclusion, not just a formal stat. And that effective financial inclusion is, I think, where our focus lies next, not just the initial financial inclusion metric of 98%. And how do we drive that inclusive growth and that participation from everyone for everybody's sake? Because that inclusive development is going to be essential for South Africa going forward.
I think you mentioned a number of things that I want to actually target. The first one is that, of course, if we have financial inclusion, better financial inclusion, that will help us grow the economy, which is, of course, the huge challenge in South Africa. And then you also talk about effective financial inclusion, which I suppose is maybe the key part here, because, as you say, we have 98% of South Africans with a bank account, but that does not actually undermine mean inclusion. So when we think about effective inclusion, what have been the key challenges that have faced us?
So when we talk about this subsegment of the population not having enough money to actually put into the accounts, it's very difficult to have that effective inclusion conversation. Add to this recipe the fact that a lot of these economies, when we specifically the township economy, are cash based. The cash is convenient, cash is immediate. That there are many reasons why cash prevails. A lot of this market also relies on on informal commerce, in formal versus informal ecosystems as well have a lot to play in this conversation when they are engaged in informal commerce or informal sectors of the business. It is not so easy to surmount the barriers to entry in terms of being able to seek credit or lending and so on when we're dealing with real problems in terms of what is my proof of address, what is where do I live, where and those kind of things. But one of the main things that interests me or I find intriguing is that when we think about the township economy specifically, or bringing them into the fold, so to speak, we tend to forget that we are not going into an open field of no solutions. Townships are quite vibrant communities who have done banking in one way or another. Finance is flourishing in townships with or without the banks, so to speak. So banks don't just have to go in and introduce new products and show the township subsegments what financial products look like. They actually have to go in and compete with the products that are in these places have been flourishing. Things like townships where without the need for banks and insurance companies have been saving, have been running stockpiles, have been running burial plans and funeral plans of their own, have been lending, have been running payday lending, revolving credits running on a monthly basis. These things are happening. There are strong competitors, whether they are recognized or not. There is strong competition in townships, both from financial role players perspective, even though they may not be formalized or fully compliant, but they are there, and they have products that are competitive, whether we like it or not, whether we recognize it or not. And that for me is quite interesting, and that opens the door to a very meaningful conversation. Unless we start talking about in terms of these challenges, unless we start talking about taking a step back and acknowledging all of that, the reality of the township, I think and keep trying to put our brand of understanding of what financial acumen and what financial product and what financial ecosystem should look like, trying to paste them on, we are going to continue to see limited traction and limited success. And I think these are real challenges in South Africa that can't just be addressed from a copy and paste global leading perspective that we consultants often talk about. I think real acknowledgement that we need to venture deeper into these communities, into these ecosystems, and understand and learn what they do, why they do, how they do this, and meet them halfway. If not, understand how township may very well be able to educate us and disrupt the market while we are trying to disrupt townships.
Virat, I think you've said some really interesting things to us that I think we should actually further expand. We talk about certain segments of the economy that are excluded, and that is young people in particular, but also you talk about township economies or informal sector. And I think one of the things that we need to really focus on, and I think you already say, that we have to compete because much of the so-called financial products already exist in these economies. But what are the key assumptions that we should actually be challenging at this time?
Nandi, this is quite an important topic, and it's quite topical for many of our clients, because a lot of investment has gone into this arena for quite a few years without without a lot of tangible outcomes. Well, not the level of desired outcomes that we would like to see. The township economies are flourishing. There's a 900 billion rand worth of commerce that's taking place in townships annually. 40% of this, give or take, is informal, and it's not like as I was saying earlier, it's not like townships have been sitting idle and waiting for us to come and give them banking. Banking has always been happening. Banking is flourishing. The utility of banking exists, and banking is flourishing. There's lending happening, there's credit happening, there's savings happening, there's insurance happening. All of these things are happening all the time in terms of townships. So I think it's fundamental that we actually start looking at the broader holistic impact of townships, but we need to give special attention to the nuances, like I was saying, in these townships, and challenge these assumptions effectively.
So Virat, after everything that you've counted, especially some of the ways in which we need to actually compete with what's already in this market, what are the key things actually we should be doing?
Andy, I think we need to do four things. We need to acknowledge, first of all, that there is value in the township economy, and there's innovation in township economies, and there is banking already and financial services already in township economies. With that acknowledgement comes the acceptance that we need to integrate deeply. We need to come up with new products. We need to think differently around this and come up with very specific solutions to townships. And then lastly, collaboration aspect. Collaboration is twofold. Collaboration is both with the communities. A lot of the future solutions from township perspective, in my mind, the success of these solutions is going to depend on how well integrated we are in these communities, and that collaboration with communities. It is not the simple aspect of opening a branch and having a brand position in there, in a geographical area. It's a lot more about collaborating with those communities. It's almost a relationship base that we do for commercial and corporate banking. We need to bring that level of collaboration and intertwining with those communities. And the second level of collaboration for me is, this is not just a financial institutions play to actually realize the benefits that we're talking about. This is a broader ecosystem play at this point. Banks are going to need the right kind of partners to actually venture into the townships in a meaningful way, through banks connecting with large wholesale retailers who are actually our suppliers to the vendors and the service providers that actively reach out. Township tentacles reaching out beyond townships to our doorstep is welcoming us to engage, while we are apprehensive about actually going into these townships because of safety and security concerns. I think the future strategy perspective for township needs to be very specific and very precise around the models that flourish in townships, together in close collaboration and partnerships, both with township communities as well as other players like retailers and telcos involved in this conversation.
Gosh, I actually want to dig into some of those things that you're saying, but unfortunately we have run out of time. To our audience, thank you so much for having listened to this episode, and please look out for the third episode in this series, which will be coming up soon. From ourselves, have a good afternoon.
Thank you.